Okay, real life traders, Friday. What are we? Friday, first week of January, January 5th, 2024, the new year. All right, so I'm on from 3 to 4 p.m. Eastern. So question, because I am curious, with the new year, we always tend to get some, new members showing up and participating. So give me a one, because I want to make sure that I welcome anybody who is new. So give me one in the chat real quick if there's anybody here who's new to real life trading as of. Okay, Darren. Yeah, I thought I hadn't recognized Darren's name. Anybody else? Is Darren the Micus? Yeah. So am I pronouncing that right? Micus, Mikus, Micus. Give me a one if I'm close. And Crystal is one-ish. So Crystal's been with us before. So okay, so interesting, Micus. I got a email. I guess that your trial period must have been ending, but I guess are you still on the trial or did you actually join as it's written, Micus? Okay. So I'm curious, did you are you still under the trial or did you actually join now? Still in the trial. Okay, so that was it. I got an email. I got an email about a couple people who were I guess their trial is ending. So anyway, hope you've enjoyed it, and I hope would love for you to join the community and stay with us. How have you liked it so far? While he's typing, oh, I'm assuming Lycus is a he. Could be wrong about that. But anyway, so Darren. So question, just so I've got Darren and then Crystal Micus. So just curious, level of experience trading. Darren, I'll let you, well, if all three of you want to respond, are you new to trading, kind of intermediate, advanced? Well, I'm just curious what your okay, cool. So you're going to stay with us. That's great. Glad to have you with us. So anyway, so that question, just curious, new. Oh, okay. So Crystal, you just did the 90-day course. Terrific. And Darren's got 10 years. Fantastic. Okay, cool. And Crystal, how did you find that 90-day class? Was that beneficial to you? Hopefully it was good. I'm assuming it was good, just because you're here and um, amazing. Never touched stuff. Okay, cool, great. That's fantastic. Yeah, so that 90-day course is really, really helpful. And then so you've got the funded account now, right? Yep, trying. Yep. Okay. So good. So you're on the funded account now. So okay, so this session that I'm doing is on the real and so for those of you who've been here for a long time, bear with me. And then Darren, you looks like you've been trading for 10 years. But you wrote 10 tiers. So I'm not sure if the tiers are from maybe issues that you've had trading. I'm not sure, but or if that was just a typo. Um, okay, and Micah says I'm new, have been watching Jeremy on YouTube and beginner's course on ROT. Perfect, cool. Well, good place for you to be, right? So I do these sessions on analyzing price action and volume because, and again, those people who are, you know, ROT veterans or who have listened to me many times, you know the backstory here, but let me just, explain this. So the reality is, right, when you're trading, the reality is you can and should be able to trade on just price action and volume alone, right? I know a lot of people like to add indicators, and I have some, of course. But the reality is that you only need a couple indicators. But for the most part, all you need is price action and volume. And so, uh, not my main approach to trading, but one of my main approaches to trading is, I mean, because over time, right, you're going to develop different strategies and different things that you're comfortable trading. But one of my go-tos is looking for volume spikes. And so that's what I'm going to talk about today is analyzing price action and volume and how that's going to help you with your trading, because not every setup is equal, right? You might, some setups, what I always try to do, I try to rate my setups. Is it an A setup? Is it a B? Is it a C? Or is it D? And depending on the time of day, the time of the week, the month, depending on where I am in my trading, I might just completely ignore a D setup and just try to wait and focus on an A setup, right? So the key is finding those setups with the highest probability of success, right? So if that means sitting on my hands and passing on a trade or two or three, I'm okay with that, right? So the key here is not to allow FOMO, fear of missing out, control your emotions and get the better of you, but to be in control of your emotions, be patient, and then look for the best trades. And so one of the approaches that I take is this, analyzing the volume and the price action, and specifically when it comes to the volume, looking for volume spikes. I'm going to give you a bunch of examples here. Okay. You go to well, I guess I'm going to start here on this. Let's look at, yeah, we can look at AMD here first. And I should also mention that if, I know you're new to trading, so I'm going to be throwing a lot of information at you, but the other thing that I am a huge proponent of, and that I think that everyone should incorporate into the trading, is multi-time frame analysis. So looking at multiple time frames, so if you're looking at a setup on a 3-minute chart, right? Look at it on the 5-minute, look at it on the 15. Ideally, you want to see all those charts in alignment. You want to see the same setup. Okay, and John was going to say, I was going to say AMD. So perfect, John, we're on the same page, right? So we're going to look at AMD. So the first thing I always do, let me get rid of some of these lines. I'm not sure. These are old lines. Okay. So the first thing that I always do is I look at AMD or any stock that I'm looking at, and I look at it on the daily chart initially. Oh, Andrew, absolutely. The 5-minute trailing stop for sure. Yep. We will definitely cover that. So I'll look at it on the daily chart first, right? Because I want to see, okay, on the daily, what's happening? Okay. So what did we get here? Well, today we had we got a gap up. And for those of you who are new to the gaps, or if you're taking the beginner course, we talk about the retest gap. We talk about the gap and go. So here's a good example of a retest gap. Right? The retest gap is a green candle yesterday, gapping up. So here's yesterday's candle, here's today's candle. So it's gapping in the direction of yesterday's candle. So that is a retest gap. So gap and go would be if this was gapping green candle here and a gap down, that would be a gap and go. So it's going against against yesterday's price action, but it's going with yesterday's price action. So it is a retest gap. And the retest, if I zoom in here, that little tiny portion of the wick sticking down, that's it. That's today's retest. Oh, am I on the wrong screen? Sorry about that. If I do that, be sure to call me out on it, right? Because I don't have anything that indicates which screen I'm on. You should see it now, right? Perfect. Cool. Yeah, let me know, because the one thing that kind of bugs me about this is once I choose a screen, it doesn't leave anything around the screen to let me know which screen I'm actually looking at. So I lose track sometimes of which screen I'm looking at. So here is what I was talking about was here's the green candle gapping up. So there's your retest gap. That little tiny wick down below here, that's the retest, right? So sometimes you get a big retest, sometimes you get a little retest. It really depends. And there's no like formula, there's no given amount of that retest. Sometimes on a day like this, you would expect to come down and retest the close from yesterday, but it didn't. It just came down. But nice open, because if you look where it opened right above this black line that I have here. If I right click it, so you can see that's the 20. It's the 20 exponential moving average. So it was a pretty decent open and got, just some, it didn't gap above the high of yesterday, but it gapped above the close and it gapped right above this, 20, which is going to provide some support. So that's the first thing I look at because I want to anticipate, okay, if it's a retest gap, I know that, price is going to go up during the day, the intraday price movement. I will expect price to go up and come down, go up and come down. And that's typically what happens. Sometimes you just get something that just rages, right? That just moves. So again, not everything is always consistent in trading, but you can see here, if I zoom in a little bit here on AMD, right? So there's really not a whole lot of pullbacks, right? This first initial move here was just like, it just kept going, right? So the question is, we're going to talk about a couple different things, like what are the setups that you can take, right? What can you look for to get in so you don't miss that entire move, right? Uh, yeah, and so John's saying it was a nice move, and the point of control, good, way to notice that, right? The point of control was moving up with price action, which is a good sign, right? So if you're going long, if you're, looking to go bullish on this and go long, you want, as price is moving up, you want to see that point of control, which is this area right here, right? The red area. And for those of you who aren't familiar with the volume profile, that all this is this area that you're seeing, this kind of light blue area here, and then it turns red. That is volume profile. And that's just a horizontal view of looking at volume, but it's by price versus down here, right? You're looking at volume by time, right? So down here, it's going to tell you what the volume was based on a particular time. Whereas here, when it's going horizontal, this is just another view of volume, but it's volume by price. And how that's helpful is that you can almost look at these levels as support and resistance zones, right? So when price came down here, you could see how the point of control was here and it came down, and then it broke below, but it came back to it, right? So the point of control is where that is the level, the price level. And right now it's somewhere around the 139.5 level, right? That is the level where the majority of buyers and sellers today agreed that that was a good and fair price. So price will tend to want to go back to it. And that's why when it dropped below it here, it came back to it, dropped below, came back to it, and then it moved away, right? And at this point of control hasn't moved down with it, right? So I would think that at some point price will come back up to here. And what John was pointing out is that as price was moving up today, the point of control moved up with it. Okay. So that was and that's a good thing, right? Or if you're going short, right? Let's say if you're going short and price action is way down here where this is now, or even further, and point of control is up here, what that's telling you, what you need to know is that price is not, the buyers and sellers are really not in agreement right now, right? That, yeah, I mean, there's transactions going off, but this is the area where the majority of buyers and sellers thought was like the fair price. So if point of control is not moving down, I would expect, and again, we're running out of time. It's, we've got 40 more minutes left in the market. But if this was like earlier in the day and I see price down here and the point of control is up here and it's not moving with it, I would expect price to move back to it. Almost like kind of like a magnet drawing price back to it. But anyway, if we go back to here, let's take a look at a couple of different ways that you could have played AMD. So for those of you in the 90-day class or who took it, and let's see, that was, I think, let me go back to the chat here. That was Crystal, right? So Crystal, are you trading the 10 EMA? Is that the kind of primary strategy that you're trading right now? 10 EMA and S curve. Cool. Okay. So sometimes when you see a move like this, right, you go, okay, well, what was the entry? Where could you have gotten in? Well, the answer is like right here, right? So if you're looking at different setups, different, places to get in, this would have been your first opportunity if you were playing that 10 EMA, right? So here's your first. So we open up bullish, bullish, bullish. We're above the 10 EMA. you get your first bearish candle, entry above it, stop would have been down below. Let me zoom in a little bit, make it a little more clear, right? Here's your first bearish candle above the 10 EMA. My 10 EMA is this red line. So entry above, the stop would go down below this candle here, right? So you're looking for price action down below the 10 EMA where to put your stop. So stop down here, entry up here, and it would have been a great trade. Let me pull back a little bit so you can see this. So that would have been a really nice trade. Now, let's say you didn't get that. Right? Let's say you missed that first opportunity. Technically, if you're when can you ignore pre-market if it hasn't cleared? So the pre-market, right? The pre-market is this area here, and we were above it. So, you know, the pre-market is important when the market first opens, right? And I usually will use pre-market for like the first 30 minutes, but later, as the later that you get in the day, the less important or the less emphasis I put on the pre-market. But, you know, this, we had already, here was the pre-market high right here. And you could see, right? Here was, this was that level that we were struggling with right here. So pre-market was there. And there are a lot of people, right? Another possible setup. There are a lot of people who would just play that pre-market high, right? Price opens up here and, you know, and it comes down here, and then their stop will be down below this first candle somewhere, you know, down here. And all they're going to do is they're going to play the break of the pre-market high. And that's another way you could play this, right? A little more aggressive, right? Because you don't have a lot of data at that point to go off of, right? So this is a 3-minute chart, right? So you don't have a ton of data here to go off of. So it's really kind of just like, all right, well, I think if I play that, you know, that I'm willing to take the risk of taking a break above that pre-market and see if that works. And it worked beautifully, right? My only thing about like getting into a trade that early is the amount of traps that take place in the first 15 minutes of the market, right? Whether it's a bull trap or a bear trap. That would be my only hesitation for taking this. But I know that there's a lot of more, and again, I'm not the most aggressive trader, just my personal style of trading. I'm not that aggressive. So I'm more of a data-driven person where I want to see more price action, more data, so I can make a decision based off that. But plenty of people will just take the break of that pre-market high right there, stop down below, and off they go. Now, so let's say Andrew was asking about that 5-minute trailing stop. Okay, so let's just give this, and for you new traders who haven't, new to real life trading, or new traders who haven't seen this before, I'm going to give you what is my go-to way of trailing my stop. Now, again, I know I don't want to go against anything that you've already been taught or that you might have learned in the 90-day course, right? So I know that there are, you know, there's some emphasis on waiting, you know, 21 minutes, you know, it all depends, right? But for me, you know, as you develop in your trading, you're going to want to develop your own personal approach to, you know, whether it's the different strategies you trade. But in this case, what I'm going to talk about is my personal strategy for trailing my stop. So once I get into a trade, how I'm going to trail that stop, and so that I protect my profits. I don't give anything back, because we've all been there, right? Where you've been in a winning trade and you're in the green nicely. Maybe you're up an R. Next thing you know, market reverses on you, and you end up with a loss, right? So it happened to me enough times that I was like, you know what? I'm going to come up with a strategy. I didn't create this. I actually learned this from somebody else, but still, I wanted a strategy. It worked for me because I didn't want to continue. Andrew says correct. I like it for winning trades. Absolutely, right? So I didn't want to. I'd done it enough times where I had been in a winning trade. I was profitable, and then it turned into a loss. And there's nothing worse, right? It's it can crush your morale because you're like, wait a minute, I was green and now all of a sudden I have this loss. Like, so anyway, this is my approach. So let's say, and then we'll get to the volume spike that I'm going to talk about. So let's say you did get into this trade, but even better yet, let's just forget about being that aggressive, right? That was if you took that break. But let's just break it. Let's look at this as just a 10 EMA strategy. Okay. So stop entry above here, stop down here. And again, Crystal, just want to make sure, did I answer your question? Was that enough of a clear answer for you about ignoring the pre-market? Because where this did occurred, it was above the pre-market. So that was already like moving in the direction we would want it to move. And hopefully and if you have any questions, if you want me to expand on that, just let me know in the chat. So let's say you got into this trade, okay? And we're on a 3-minute chart. So I will get into a trade on a 3-minute chart, but then I'm going to manage it on the 5-minute chart. So I'm going to say that again. Don't manage the trade on the 3-minute. It's too quick, and you will likely just get taken out of the trade too soon. Okay, Crystal said it's fine. It wasn't so much for this trade, but for other instances, when you had it set up, but pre-market not clear. You know what, Crystal? Quite honestly, like I'll take that on a case-by-case basis, right? I don't really have a rule per se because, if I see that it hasn't cleared the pre-market, but I get a beautiful setup, like let's say this pulled down here, right? And well, I will have an example. Okay. Let's say this pulled down here below, right? Below the down here. And pre-market high is here. And 5, 10, 15 minutes in the market, I get a beautiful setup down here. I'm taking it. So I'm not waiting. I'm not going to wait for it to clear, right? Because you could give up a lot of real estate waiting for it to clear that high when you have a perfectly good setup that meets all your criteria, right? So I always like to say, when I'm looking at a trade, I want to check off as many boxes as I can. So if I get a setup down here in the first 15 minutes of the market and the pre-market is high, or high is up here, I'm taking it. I'm not going to wait, right? Because I don't want to give up all those gains that I could already have if I get in early. And I'm looking at a different chart right now that I'll give you a couple different charts right now that will give you really good, for instance. So if I don't, Crystal, remind me. Okay. So once I get through this example, I'll go back to it. If for any reason I forget, just remind me. So let's say we get into this trade, right? So here's, and Crystal, you can see how this setup is that 10 EMA setup, right? Here's our red candle above the 10 EMA, entry above, the stop goes below. We're looking for price action below the 10 EMA, which is basically these two candles. And I'm curious, what's the low? Low is 137.05, 137.06. So almost identical lows, right? So that's pretty good, right? Almost identical lows. What we refer to as tweezer bottoms. So that was pretty good support right there. So there's a good place to put your stop. And Crystal, I'll mention you when you're trading the funded account, right? There are some nuances to the funded account that are a little different than if you're trading a regular brokerage account. So give yourself a little extra room on your stops. I personally will pad my stops by about 10 cents. Right. So depending if it's NVIDIA, if it's a higher priced ticker that I'm trading, definitely padding 10 cents. If it's something that has a, less expensive stock and it has tighter spreads, like, like maybe AMD, like what we're looking at here, then maybe, 5 cents, but 10 cents is usually a pretty good rule. Just something to just keep in mind that you want to give yourself a little bit of extra room because the way that the funded accounts, the way they trade, because of the bid ask spread, you can actually get taken, and it's happened to me. You can get taken out of a trade, right? Stopped out of a trade when it hasn't even hit your stop yet because of that bid ask spread. So if you have been there, okay, so you know what I'm saying. Cool. Okay, moving on. So let's say we get into this trade. So as soon as I get in, right, here's this trade. what I'm going to be looking for is I want to see as soon as I get this here, this is the high of the day, right? Current high of the day. As soon as I get a strong close above that, I'm looking to start moving my stop immediately. Okay. So let's go to the 5-minute chart. So let's say we took this trade, we're in it. We go to the 5-minute chart. Okay. So now we're on the 5-minute. So this is the what I referred to as the 5-minute 2-bar trailing stop. And this is how I like to personally trail my stop to, again, protect profit and prevent a winning trade from turning into a losing trade. So we entered on the 3-minute, but as soon as I'm in the trade, I immediately go to a 5-minute chart. And so what I said was I was looking for, I want to see, this was the high of the day. So that's my most current recent pivot. As soon as I can get a close above that, I'm going to look to move my stop. So here's the candle. So I got into it. I think, let me go back here. Let me just see what time. That was on this candle here. So at 9:42, I got into the trade. Okay. 9:42, get into the trade, come back here. So that's basically this candle here, right? So this candle went, so I guess it would be, yeah, this candle here would have triggered me into the trade. So I look for the close above this level. So the key here is the rules are when you're going bullish, you need to keep making higher highs and higher lows in order to move your stop. So as soon as I get that close above, and that's my rule, I want to see a close above most recent pivot. Then I can start using this strategy. Here I get the close above it. So I count back 2 candles, right? Again, we're on a 5-minute chart. Count back 2 candles, 1, 2. Now, technically my stop can go below this candle. And that's where my stop is already because that's where I place it. So if I wanted to, I could inch this up a little bit, right? And keeping in mind that the key to trading, I shouldn't say the key. One of the keys to trading is always try to lose less than 1 R. So if you can move your stop even by a penny, do it, right? So if I count back 2, right? I put my stop down here. I didn't put it right below it initially, but if I count back 2, my stop can go below here. So maybe what I do at this point is I just inch it up just a little bit, okay? I'm not gonna bring it up right underneath that candle, but just a little bit. Just move it up a few pennies, right? Just a few pennies, but it helps. It counts, right? Next candle. So what's the rule? You have to have a higher high and a higher low on the next candle. And we get it here. So compared to this candle, we did make a higher high and a higher low, right? The wicks count back 2, 1, 2. Now my stop can be below this candle. I'm going to move my stop. Now it's going to go right here, right? Actually, you know what I want to do? I want to put a line here that shows my initial, roughly where my initial stop was, just so we have a reference. So something like this initially, right? So if you look now, I haven't cut my loss by a half an hour, but I definitely, it's more than a quarter, right? So maybe at this point I'm losing like 0.6 R if price reverses and takes me out, right? So 0.6 R is a lot better than losing a full R. And again, at this point, we're profitable, right? So I don't want to go from profit to a full R loss. So I'm going to move my stop up. Okay, next candle, again, we have to make a higher high and a higher low. That's the key rule. So the high of this candle here, 139.33. The high of this one, 139.30. So we made a higher low, but we didn't make a higher high. So I have to wait. I can't do anything. My stop remains exactly where it is. Now I still need to make a higher high and a higher low compared to this candle, right? So if this candle doesn't count, you still have to use this candle as your gauge. Next candle comes in and it definitely makes a higher high and a higher low compared to this. From here, now count back 2, 1, 2. Now look at this, right? This is the beauty of why I love this strategy so much. Move it up. Where's my stop now? Think about this. In a matter of minutes, right? John, right? Lock in a little bit of profit. I'm actually a little above break even right now, right? So think about what this does to you mentally, right? Free trade. In a matter of minutes, I'm in a free trade. Like I don't have to stress about this, right? Even if price reverses right now and takes me out and then makes that S curve, right, that you're looking for, comes down here and takes me out, I can still get back in, right? I don't, just because I get taken out of the trade now, I'm still going to make a tiny little bit of a profit, enough maybe for a cup of coffee, but I'm not losing and I can get back in if that happens, right? Next candle here does not make the higher low. Well, one thing I skipped real quick was, always have, I should not have missed this part, right? But when you have your setup, okay, so especially, those of you newer to trading, right? Always have your profit taker in place, right? So I always throw in always like at least a 2R, maybe a 3R profit. But if I might have a 2R profit in place immediately, right? So let's say I'm just eyeballing this, right? I'm just going maybe 1R is about here, that's 2R. Okay. So always, I want to emphasize, always put your order in with your entry, your stop, and your profit target. All three of those. Do an OCO bracket. So when your order gets triggered and you're in the trade, you already have your profit taker and your stop loss in place. And then you can manually adjust those if you want to. Right. So that would have been my profit taker. Okay. For 2R. Now, again, those of you who've been with me for a while, I don't take all at 2R. I'm going to take 90% off at 2R, right? I'm going to leave 10% on to see if it can keep running. But I want to lock in my 2R because that's my goal, right? And then I will let it run if it continues to run. Okay. So last candle we looked at was here. So now we need a higher low compared to this. Doesn't happen here, does not happen here, does not happen here. Finally here, this candle, we get a higher high and a higher low compared to this candle. From here, count back 2, 1, 2. Well, beautiful. Now our stop can go right below what is the new pivot, right? So this candle, right? We came up here and we pulled back and now we made a higher high. So this is the new pivot. It's a perfect place to have your stop. And then, so this candle, that was the last one we looked at. This candle may or may not have triggered, right? Sometimes it's got to get through it a little bit to trigger. So let's just assume that we have not yet, let's assume that we've not yet, for whatever reason, it didn't fill our order in this candle, right? It got right to it, maybe got within a penny of it, did not fill our order, but we did make a higher high and a higher low compared to this. Count back 2, 1, 2. Now our stop can be below this candle, right? But for me, when I look at this, I go, okay, well, this candle and the pivot, they're so close. So maybe what I'll do is I'll just bring my stop up a little bit more, but I'm not going to put it above this pivot because that is a critical pivot right there, right? It's the most recent pivot. So I want to make sure that that is the area, that is the level that would need to be broken in order for the trade to be broken at this point. So, and then again, that's because this low and this low are so close. So now I have to sit through this little pullback here. I need to wait for my higher high and a higher low compared to this candle. And so I have to be really patient and wait for that to happen. And then finally it happens here. And that candle would have then hit my 2R level clearly, right? So let's say now I go, okay, I'm out of 90% of my trade here because it hit that level. I'm holding on to 10% of my position because that's how I trade, right? I want to leave 10% on in the event that it just continues to skyrocket, right? I want to be in that. I want to benefit from that. So from here, I count back to 1, 2, right? This candle, again, we're 5-minute chart. Count back to this candle right here. That is my new stop level. Stop goes right here below this candle. And now I should also mention, so because I've hit my 2R target, I'm gonna be a little tighter with my stop loss. I'm not going to give it as much room as I would normally give it because I've already hit my target. So what happens here? It goes up and then this makes a higher high and a higher low compared to this one. Count back to 1, 2. Now my stop can go below there, and I am going to move my stop up like here, right? And then next candle, boom, I get taken out, right? So then now I'm trailed out of my 10%. So, I gave up a little bit of my profit. I hit my 2-hour target with 90% of my position, gave back a little bit, but I'm okay with that, right? I'm okay giving back a tiny bit, right? I mean, we're talking at this point, 10% of my order would have been, nominal, just between, this move right here. That would have been very little money that I would be, giving up. But that is a great way to trail your stop. You can see how quickly you're able to move your stop to break even, first of all, key thing, and then how you can then follow price action, right? As long as price is moving in your direction, you just keep following it. And it's a simple, easy method. Yeah, so Andrew says, I'll get back 10% on 2 hours all day long. Absolutely, right? Sometimes though, you use this 2-bar trailing stop method, and it's just you get into a trending stock and it will just keep running and running, right? So and you can come up with all your own rules. Like you could say, well, I'm not even going to have a target. I'm just going to continue to trail my stop. Like maybe set your initial profit target at like 5 on. I don't know. And then just continue to trail it. Because sometimes if you do get into a nicely trending stock, it's going to keep moving. So anyway, that's what Andrew was asking about, the 5-minute 2-bar trailing stop. So any questions? And Crystal and let's see, Micus and Darren. Yeah. So the 3 new members. Just wondering, yeah, you like it. Yeah, it's a great strategy, right? Just another thing that you can add to your trading plan. Really simple, but again, the key, and oh, by the way, um, I am recording this. So if you want to refer back to what I will do is I will, after the session, at some point today or tomorrow, I will process this recording. I'll get it up on YouTube. If you want to see more of this, if you go to YouTube and just search that, I'm putting it in the chat. So that's my personal YouTube channel on so what I'll do is I will post the video in Slack, but I don't want to overload. I don't want to overload the real life trading YouTube channel with stuff. So I just post this. I just put it up on my own personal YouTube channel, but then I will put that in Slack. But if you yeah, so John, yeah, I'm going to talk about that in a second as well. Yep, the volume spike. So if you want to go over to that, I have a lot of other videos on this, on the 2-bar trailing stop and on this volume spike that we're going to talk about, right? So here is, so what John was talking about, this, so the volume spike, okay? So I'm going to, because let's see, I have about 15 more minutes. So I think what I'll do, let's see, I'm just scanning. Give me 1 second. I'm gonna come up with a better, because so this, I'll walk you through it real quick with this with AMD, which we're looking at, and then I'm going to go to a different chart because this is, I mean, it's okay, right? And this is what I was saying about how I will rate my trades as an A, B, C, D. So what I'm looking for, the key is that what I want to see is at the top of a move. Okay, so we had this beautiful move here, right? What I'm looking for is, and let's pay attention to the volume, right? So we start getting some volume spikes here. So volume up through this initial part of the move here, right? See how the volume is increasing, and it increases here, and then it drops off a little bit, and then it increases again here. And then look what happens. Volume drops off, right? And it picks up a little bit on this candle here, but then see this drop off in volume. So what I'm looking for specifically is as price is moving up or if price is moving down, just all depends, right? So what I'm looking for is at the top of the move, right? After price made this, and I've seen that volume has dropped off, I want to see a volume spike at the top of a move. And I want to see with that volume spike, ideally, if I'm looking here at the top of a move, I want to see a shooting star, right? So inverted hammer, however you want to refer to it, right? But I want to see a shooting star at the top of the move, right? So this is not, this is, you do get the volume spike here, right? And that's what I'm looking for. On the 3 minute, yeah, a little better shooting star, correct. And this is also why, John, I go, but I want to also look at it on a higher time frame, right? So yeah, 3 minute, yes. So there's a good example, right? So 3 minute chart, and this would have, it would have worked, right? It would have been a slower grind, right? Down. Like normally, like what I'm looking for is, on the short moves, I want to see it happen quick, right? Aggressive. But this is a really good example that John's pointing out on the 3 minute, right? So this is a nice looking, that is exactly what I'm looking for, right? At this time of day, so that is 11:50. Okay, 11:15. I still am trading on a 3 minute, so I'll start switching over to the 5 minute chart a little bit later. So yeah, so a 3 minute chart, I probably would have been watching that. Okay, so I typically go, I'll do my 3 minute chart from market open until usually about 11:30, and then I'm going to be looking more because then 11:30 the market slows down a little bit, and then I'm definitely going to be using a 5 minute chart at lunchtime and then after lunch. So at this point in time at 11:15, yeah, I would have been on a 3 minute chart trading off that. So that is a very nice looking, that's exactly what I'm looking for. And if you look at the volume, right, again on the 3 minute, right, volume drops off here, picks up a little bit. So it picks up. Now here's a really good thing to notice, right? Because you can't go off the volume spike alone. That's why I say the volume spike has to be in conjunction with the shooting star. Because look what happened here. You look here, right? So volume dropped off, and then as it made a new high here, right? Volume picked up a little bit, but you didn't really get a huge volume spike, but it was greater than the volume spike, the volume preceding it. But you don't have the shooting star, right? It's a little bit of upper wick, but not, it's not a shooting star. And then it comes down. And then this, when I see setups like this, I do anticipate a double top, right? So when it's not a shooting star, I actually do anticipate a double top to come. And that's exactly what happened here. And then when you get back up in here, again, look at how volume drops off here. And then you get this volume spike again, right? But if you look left, this volume here is pretty much identical to most of the volume, the high volume, right? So it's greater than the volume immediately preceding it, but it's about the same as the high volume areas previously. And it's not a shooting star, right? So it's a bigger body candle. It's not exactly what I'm looking for. But then you get up here and you make a new high. All right, Darren, have a great weekend. Thanks for being with us. So here you get this shooting star, right? So that's the key to this approach to trading is I need the shooting star with the volume spike. And you get the shooting star, and you can see how the sentiment of this candle, right? And that's why we're looking at analyzing price action, which is the candle, and then volume. So think about look at the volume spike here, right? So that volume was actually greater than the previous volume highs that we looked at. That's what I'm looking for is when volume increases above, it's like the next highest was back in here. So you get the shooting star. Think about the difference, the sentiment of this candle compared to these here, right? Much greater upper wick, right? Small body, right? So this is all selling pressure here. And the other thing that I like about it is, so I'm looking for that shooting star. I'm looking for it at either a new high or making a double top. So this was when it made the new high. And then you get the shooting star here with volume, right? That's exactly what I'm looking for. Then you can throw in, you can just bracket this, right? So those of you who've been here for a while, you know that I've adjusted my trading for a while there on these setups. I'm not a big believer in taking breakouts of breakdowns because of the number of traps that happen. But I have now through back trading, I've changed my trading plan to allow me to take breakouts and breakdowns. So let's say if I got a hammer candle down here, I can take the breakout. If I get the shooting star up here, I can take the breakdown. So this would have been beautiful. Look at this. If you entry below this candle, stop above it, and then, off you go, right? You could have, I probably would have, not probably, I can tell you exactly what I would have been targeting, which is this yellow goldish line here. That's VWAP. So on this setup here, my target would have been VWAP right here. And that's where I would have been taking off 90% of my trade and holding on to 10. Yeah. So John, yeah, I mean, but it's all about anticipation, right? So and I get what you're saying because it happened super fast, but I actually would have had my order already in place before this candle even closed, right? So I would have been watching that candle and watching that candle form, and I would have been paying attention to the volume increasing down here, and I would have actually set that up. So it just takes practice, but I would have, as that candle was forming, I actually would have been setting up that order in my broker so that as soon as it closed, I could click. If that closed the way it looks, I would have then been able to click submit, right? So it's all about anticipating it because I can create any order I want and just cancel it, right? So as this candle is forming, right, I can set up this order and I just know my entry is going to be below it, and then my stop is going to be above it. Throw that in my broker, and then if this comes down here and gives me this, nice upper wick, but then all of a sudden price comes back up into here and it closes up in here, I just cancel the order, right? But I will actively be putting my order in the broker, but it's not clicking submit yet, right? I will set the order up and then I will wait for that candle to close, right? Because you don't never know until that candle is actually finished forming how it's going to look. And then once that closed, then I would have just clicked submit and then, boom, you get in, right? So while I'm thinking about this, okay, so is everyone familiar with in this order, I would have been doing a stop limit, right? So this would have been a stop limit, and my stop would have been, um, is everyone familiar with the stop limit order? And really, I'm talking to the newer people, right? Because I know orders, getting orders down can be challenging and understanding the nuances of them. So if you want me to expand upon the stop order, the stop limit order, just let me know because it can get a little confusing. So I'll just say that, let's say if my, so here's the low of that candle was 140.74. Okay, that's the low of that candle, 140.74. My my approach is I always go 3 pennies. Okay, yeah, but it just shot past. How would you get in? Okay, that's the key right there, right? So my approach to getting into when I'm taking a breakdown like this, right? So a stop limit order has two components: the stop, which is what triggers your order, and then the limit, which is saying, well, I want to get in, but I'm not willing to pay, you know, any, you know, in this case, any less than a certain level, right? Because I'm looking to go short, right? So in this case, so first of all, let's look at the low. So the low of this candle is 140.74. So me personally, I never go a penny below, 2 pennies. I go 3 pennies below the low, and that is my stop. Okay. So when you're talking about AMD is a pretty tight bid ask spread. So if you want to make sure that you get in, what you do is if I know that if I want to get in here on a stop limit order, my stop is going to be where I actually want the order to trigger, which is 3 pennies below that. So my stop would have been 140.71, right? So 140.71 would have been, and you know what, let me put this, let's put it right here. So the stop would have been equals, what I say, 140.71. Thank you. Okay. So the stop would have been 140.71. Now, if you want to make sure that you get in, what a lot of people do, they'll make their stop 140.71 and they'll make the limit 140.71. Well, that's how you get skipped, right? Because you're saying that my trigger is going to be 140.71, but I don't want to pay any less than 140.71. And so because they're both equal, that's how you can get skipped, especially when something moves really quickly like that. So what I like to do is give this a couple pennies. Okay. And I will say my stop is 140.71, but then my actual limit that I'm going to put in, the limit would equal, let's say, 140.69. Okay. So what happens is the order triggers here, but you're saying, but that's really what I want to, that's where ideally where I would want to get in, but I'm willing to give you a couple pennies to trigger me in, right? So if you do your stop here at 140.71, but then you say, but I'm willing to give up a couple pennies, then as long as I'm not paying less than 140.69, that gives you that little buffer. You could even increase that and make that 140.68, right? And that's how you don't get skipped on something like that. Give it a couple pennies. But what a lot of people will do is they will make their stop number and their limit number exactly the same. And then all of a sudden you get that quick move, and that's how you get skipped. So just kind of a little tip there, that just go, give yourself a couple pennies. Okay. And then you will ensure that you don't, I can't say ensure because you might still get skipped, but you'll increase your chances of getting filled on that trade by giving yourself a couple extra pennies. All right. Looks like we have Yates coming in. It's 4 o'clock.
How you doing, Steven?
Hey, Yates, how are you?
Doing great. Happy Friday.
Yeah, happy Friday. Let me make you
Short
a
week.
host.
Doesn't feel like Friday. It was over before we even started, it feels like.
All right, Andrew, John, everybody, thank you. Appreciate you being with me. Crystal, hope that was helpful for you. Let me make you host. Let me stop my share. I can also,
Sweet.
I will stop the video as well.